Kitco news coverage of the 32nd Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
Welcome back to the Bank of Montreal's Global Metals, Mining and Critical Minerals Conference here in sunny Hollywood, Florida. I'm Michelle Makori. This is Kitco News, and I'm thrilled to welcome back to the show Rob McEwen. Rob, great to have you with us.
Wonderful to be on, Michelle. Thank you.
And as a recap for our viewers, Rob McEwen, you are, of course, the chairman and chief owner of McEwen Mining, an inductee of the Canadian Mining Hall of Fame, and a three-time winner of the Kitco Mining CEO of the Year Award.
All right.
Amongst other accolades. And we'll also throw in there that you're an officer of the Order of Canada. That happened too. Not as prestigious as the Kitco CEO of the Year Award.
No, nothing could be that important.
And congratulations are also in order for this deal that you've just closed with Stellantis. McEwen Copper, a subsidiary of McEwen Mining, just closing a $155 million deal with Stellantis Autos. And for those who are not aware of what is under the Stellantis umbrella, because I wasn't, it includes brands such as Alfa Romeo, Chrysler, Peugeot, Dodge, Fiat, Jeep. So a huge automaker, and you have just closed a deal for a 30 billion Argentinian pesos injection into McEwen Copper. And as I said, that's about 155 million US dollars. Very big deal. Congratulations. Tell us about that.
They have been operating in Argentina for over 100 years. They were looking to deploy some of their capital they earn in Argentina into projects, and we have a very large copper project there that they've invested in after doing extensive due diligence. And so they've earned a 14.2% interest in the company. At the same time, a subsidiary of Rio Tinto, the second largest mining company in the world, came in for $30 million. So this funds the project, will move it through an updated preliminary economic assessment onto a feasibility, and then go permit and build. They insisted on ensuring that they could participate in future financings in proportion to what they own. So there's 28% of future funding that's probably there if they still like the project.
And give us some background. How did this deal come about?
Well, McEwen Copper was owned by McEwen Mining, and our share price dived. And I thought, we have to separate the copper from the precious metals. And that started last summer. I put a $40 million investment in, and then we closed on 82. And we said, well, who's going to need copper? And you looked at the transition of energy to electrification, and we started phoning auto companies saying, you're going to need copper. And so Stellantis was intrigued, hired some advisors to look at the deposit, and said, well, this really works well with us. And they're the first OEM to invest directly into a copper mining company. You've seen people going into nickel and lithium, but not a copper investment.
So you're ahead of the trend there by soliciting Stellantis to invest directly, and we're starting to see this trend really pick up. This is the first time in the 32 years of BMO's history that we've had automakers show up at this show. Tesla, Mercedes, Ford, all present here, as this trend of vertical integration seems to be growing. What do you make of that?
Oh, you're going to see more of it, and partly driven by the fracturing of the global trading network. With all the geopolitical conflicts that are taking place in the world, some of the normal lines of distribution have been disrupted, and some sources have been, there's sanctions against it. So I think every country is now starting to look, can we source all of what we need in the country where we produce?
So an end to globalization, the trend of globalization, or a drastic slowdown, if you will?
It appears to be. I mean, you look at the tensions that are rising in the China Sea.
Yeah.
You look at what's happening in Ukraine and the sanctions against Russia. And there are 5 other countries that are supporting Russia's position. So maybe the rest of the world says, well, we're not going to deal with them. I saw a chart not too long ago that showed the number of metals and how much they produce, say, in America, and then contrasting that to how much metal is produced by Russia and China together. And it's shocking how little is being produced in America today. And you say, our modern life and civilization is based on metals. It's not appreciated, but where are we going to get them? And so there's now a scramble developing in trying to secure metals for all sorts of forms of production.
And you're seeing a split in terms of where companies want to source those metals from and where they want to see them refined.
Yes.
Talk us through that.
Well, if you're refining in China and China's becoming, well, I hope it doesn't, but becoming unfriendly or possibly an enemy in the future, you're seeing made in America. Every component has to be sourced in America. If some of it's in China, maybe that product can't be sold in the country.
What would that mean, do you think, for demand coming from China? How does that impact?
Well, they're starting to reemerge from COVID. They accounted for more than 50% of a lot of the demand for many of the metals in the world before COVID. If they get back to that position, the competition is going to become much more intense, I would imagine.
But you're seeing supply chains and companies become more insulated.
Yes, yes. Henry Ford did that when he started. He had rubber plantations in the Amazon for tires. He was up in Michigan for copper and for nickel up in Sudbury.
But you're seeing a line in terms of where this consolidation happens. What do you think is the geographic split then?
China's been the factory to the world for quite a while now. Suddenly that's cut off. Russia, big source of natural resources, it's being cut off from at least dealing with the West or the NATO countries. Those lines start creating dislocations in supply chains in ways it's very hard to imagine, but it's not a positive development.
Right. But it's Asia is still in play. For example, a lot of
Japan,
manufacturing,
Taiwan,
Vietnam, yes. I believe, is also
yes.
picking up
yes.
a lot of this.
They might pick up the slack, but it's going to require capital investment to build those facilities to supply us. And that doesn't happen overnight.
So we're seeing a bifurcation, a split in the global trading system. But we've discussed before that you're also thinking that we're seeing a bifurcation in the global monetary system. And that, again, is a trend that several guests on our show have highlighted. You're likely to see that really accelerate by what time? What date do you think?
All the monetary stimulation and low interest rates are coming back to roost. It's in the next, I'd say, few years that we're really going to see the impact of that. We've had enormous speculation in financial assets as a result of the low interest rates and the amount of monetary stimulation. And unfortunately, the monetary stimulation wasn't isolated to one country or a group of associated countries. It seemed to be a global impact. And so there was all sorts of misallocation of capital. And with the higher interest rates, the speculative element is starting to come out of the market. And that's going to drive people to some of the hard assets, foods, energy, metals, are going to be, in my mind, the place to make your investment going forward, at least for the next 4 or 5 years.
But beyond that, we've also discussed the trend of de-dollarization and the potential for there to be an alternative reserve currency, potentially a collective currency between the BRIC nations, Brazil, Russia, India, China, South Africa. Saudi Arabia wants to join that formation and potentially backed by a basket of commodities. This is a theory that Frank Giustra was one of the very first to mention on Kitco News, and more people are saying that, yeah, we're probably going to see that happen. I know last year that when you and I chatted about it, you said that that was a likelihood in your mind as well. Do you see that trend gaining momentum?
Well, the dollar has enjoyed a premium in the market ever since Bretton Woods, when all commodities were valued in dollar terms. And anyone who wanted to buy a commodity had to buy dollars first to buy the commodity. We're seeing how it was Russia and China that first came along and started saying, well, we want you to use rubles or wons to buy. Those currencies still do not have the breadth that the dollar has in terms of usage. But as you pointed out, there are other countries that are lining up behind and saying, well, we'd like to enjoy the benefits that the dollar had, being able to be the reserve currency. I don't think we're quite ready for that, but the cracks are appearing along the wall, and that is a definite direction. And the sanctions that are being placed on these countries will just accelerate that demand.
Yeah, the weaponization of the US dollar,
yes,
will ultimately lead to it being dethroned as the sole or primary global reserve currency, is what seems to be an increasingly popular opinion amongst
yes,
many guests. Not necessarily rooting for it, but just highlighting it. What do you think that could mean for commodities typically priced in dollars, like gold, for example? We're going to leave the petrodollar out of this conversation because that's a whole other can of worms. But what do you think it could mean for gold and copper and other commodities that are typically priced in the dollar?
Going up. It's just, that's been the dominant role, but you're watching gold in other currencies being higher. You'll go back to a period before the euro. I mean, the world used to play all sorts of currencies, and then we standardized, made the euro and then the dollar, and those were really the two. And commodity prices are going up all over the place.
Right.
I think we're heading back into that space where we have multiple currencies, and the hard assets will increase in value as the dollar drops in relative value to the other currencies.
And that's why you've always been a long-time bull on gold.
Always, yes. Because governments are irresponsible. It doesn't matter where you go in the world. They steal from their citizens by printing excess money and borrowing in ways they shouldn't. So they burden the economy. You look at the amount of debt that most of the Western world has right now. It's enormous. And with interest rates going up, how are they going to service it without crowding out all the other services they provide?
And McEwen Mining obviously has a number of gold assets as well. What is your outlook for the gold price for 2023?
Oh, in 2023, that might be tight. I have a $5,000 number on gold.
You're still sticking to the
I'm still
$5,000?
hard and fast.
And by what, more or less, timeline?
Let's say 3 years.
3 years, $5,000
Yeah.
gold. Is that necessarily a good thing? In the sense
For
of
me
what
it is.
For you, for you it is. But in the sense of what it means has happened on the global economy, does it signal that we're probably hit a point of chaos, some point of global conflict? Would $5,000 gold indicate that, quite frankly, hell has broken loose, or that the proverbial something has hit the fan if we hit $5,000 gold?
Well, it would mean that likely that the US dollar has dropped in value, that people are going to harder currencies, that there is some pain occurring. Maybe real estate prices might be feeling it because they're less liquid. You have to remember, gold has a very special element. It is liquidity.
Yeah.
You can sell your gold in 2 days and get your money. If you want to sell your house, it rarely goes in 2 days. Maybe it went a couple of years ago when there was all sorts of speculation. The cost of getting gold has gone up in price, so you're just ratcheting up the price. I think a lot of currencies are going to become less valuable. I was looking at an article the other day, they were talking about Lebanon. And in 1997, the exchange rate was 1,507 Lebanese pounds for $1. At the end of December last year, 15,000 Lebanese pounds bought $1.
Yeah.
And right now it takes 80,000 pounds to buy $1. That is a country that's been suffering civil war, a lot of the production base is gone, but we've demolished a lot of our production base and outsourced it.
Well, I think Lebanon is a separate case because there's been intense corruption in that country. I believe their head of their central bank is currently charged with a number of fraud, embezzlement. I will have to be more specific on the details, but I know that the head of Lebanon Central Bank is in a, very big legal trouble right now because of how he mismanaged the currency there. But
I only bring it up because that's an extreme case. I don't envision that happening in the Western world, but it does show where the political system is falling apart. They have a lot of, they printed money, they borrowed extensively. And what can happen in an extreme case? It was like the Weimar Republic after the First World War. Will we ever get to that? I hope not. But certainly people are going to put a bigger premium on assets that have traditionally held value.
Right. I want to focus a little bit more on gold in the macro picture and then circle back to McEwen Copper and McEwen Mining specifically, because whilst we're on gold, so you're anticipating $5,000 gold in 3 years' time. What's the best way to get exposure to that?
It depends on your risk profile. If you're feeling very uncertain, you might want to buy bullion. Bullion's outperformed the equities so far, but it's safer. You could then go into an ETF, although there are fees attached to that, and you might want the physical so you can walk away. You look at gold shares. Which company do you buy? You buy the seniors, they pay a dividend. So you get a bit of an income, and they'll be a target of a lot of the institutional buying. I personally live in an area which I would consider high up the risk curve, and that's in the junior space, where you can see stocks trading for pennies that go to dollars when you get the right cycle. And that's, for me, and I probably am not your normal investor, so I'm not good at advising people on what they want.
Yes, you have, let's say, a healthier portfolio than most people. I think it's safe to assume. But in terms of opportunities that you're looking at, you mentioned that you're looking at some of the juniors and you're seeing opportunity there. Any junior in particular?
Well, there's an announcement that I'll be owning 37% of a junior called Satori, and it trades for about maybe when they made the announcement it was 5 cents. It's now, I think it was up to 14 or 17 cents, but it's probably got a lot more room, and that's why I bought it. And I'm looking at the junior space and seeing we should be bringing a couple of those together to get a bigger market presence. And easier to finance.
What is the ticker of the junior that you're looking at?
It's Bud. They were trying to become a cannabis company at one point.
Oh, okay.
It's on the Toronto Venture.
Okay, and you're seeing consolidation amongst the juniors?
I see that as a very likely outcome of where we are.
Right.
And people are just saying, we're too small right now to be of significance to the market. Let's get together. We have some good properties. You can certainly buy. Ounces are cheaper to buy on the market right now than drill and find through exploration in a number of cases.
Right. Well, let's bring it back to McEwen Mining and talk about your stock's performance. Let's see, you're down about 8% year over year. That's the bad news. The good news is you're up 14.5% year to date and an astounding 137% over the last 6 months, 137% over the last 6 months for McEwen Mining, ticker MUX. What happened there?
Well, we went down because we missed guidance over the last 3 years. It's just been a very painful decline to where we were. Missed guidance, some natural disasters, a flood, a fire, throw in some COVID, a write-down of one of the resources that are mined. And the market just, I've never seen such rapid evaporation of goodwill that I had in the marketplace. We bottomed out, we changed some of the players, and it's stabilizing. Our costs are now starting to come down, our production is increasing, And we have this large copper project, and copper's become quite a topical issue. And we started separating it, financing it, moving forward. And it would represent 50 to 66% of the asset value of McEwen right now. And I think we could see $27 on our share price.
Share price currently at around $7.05. You're saying it can go up to $27.
28.
$28. Is this at the same time that gold reaches 5,000, or do you have a shorter time period?
Well, right
for that?
now we're trading at a substantial discount to our peer group based on our precious metals assets. And we have some growth in there. And then we have the copper, and on the recent deal, basically the implied value is about 550 million. And if you look at that and say, well, that's just under $6 a share just in the copper. So you're getting the 150 to 170,000 ounces of gold a year for free.
So the stock you're saying could triple over this year, from $7 to over $21.
Well, it's not going to happen tomorrow.
Yeah.
But yes, I think it has real potential. There are two value reference points in Argentina that I can compare our copper project to. There's Jose Maria and Filo. Jose Maria has a market cap of, or was bought out by Lundin for 485 million last April. And Filo is currently trading with a market cap of around 1.9 billion. We are in the same province in Argentina as they are. We're at a lower altitude. Filo, which is the 1.9 billion market cap, its deposit starts at 4,900 meters, which is the same as base camp for Everest, 17,000 feet up. Now, at that altitude, it's difficult to work as an individual. You're short of breath all the time, and machinery doesn't work that well. So we're at a lower altitude. We're 10 to 13,000 feet, and Jose Maria is higher again. We're closer to infrastructure, roads and highways. We are a larger resource than either of them on the published measured and inferred. And we're 3 times larger than Filo. We're 40% larger than Jose Maria. And so you start looking at that and saying, well, we have all these positive attributes and superior traits, I'd say. They are, however, more advanced, the projects. We're at a preliminary economic assessment and they're feasibility pre. But that's part of the value. If you took Filo's value and said, we're somewhere between $500 million and $2 billion. And right now we've just established with these investments that our project is worth $500 million. So now we're somewhere in between.
I mean, it makes sense, but you were looking at spinning out McEwen Copper in a separate IPO.
Yes, but that's down the road. That was to finance it, but we're not going to McEwen Mining is going, right now owns on this investment 52%. Stellantis and Rio own 14.2% each. I own 13.8% personally. And I put 40 million in last summer.
And it's up to 550 million.
Yeah, that's double, I guess.
More than doubled.
And so...
But if you're no longer looking at spinning it off in a separate IPO then?
Well, we were, what I wanted to do, it was a primary and secondary. So I wanted to strengthen the balance sheet significantly of McEwen Copper so we could move ahead without having to go to the market for a while. And McEwen Mining, there was a secondary sale. We sold down our position from 68% to 52%, and that allows us to reduce our debt by 38% from 65 to 40. You've seen the appreciation in the value of McEwen Copper's interest. Although our percentage ownership dropped, the value went from 160 to 290, which works out to $5.70 a share. So we increased our balance sheet at the same time deleveraging it. So it's helping both companies significantly.
All right, well, as part of the deal with the copper mine in Argentina for McEwen Copper, you're going to have to become carbon neutral by 2038. How do you plan on achieving that?
Well, we've made arrangements to have all the electricity we get at site generated by renewable sources through the Argentinian power company. They have wind, solar, and hydro. We engaged an architect out of Seattle who's very prominent in the green living, sustainable building space and said, okay, the world's changed. We have to build a mine of the future. Help us design that mine of the future. And so he's come up with some really innovative ideas. Most of the equipment we'll be using will be electrical driven. We're looking to minimize our water usage and our carbon footprint. And Stellantis is, in their goal is to be carbon neutral by 2038. We hope to be there before then.
What would that mean for your costs then? How much of an increase does that bring in, this transition?
Well, the original plan for the copper project was to have a mill and a traditional mine, and that uses a lot of water and uses a lot of power. So the model we're looking at now is a heap leach process. So it uses a fraction of the water and a fraction of the power required. So that helps us move along. The buildings will be sustainable, we'll be generating power there, food on site. One of the designs for accommodation, it's glass, it's probably about 2 football fields long. It has gardens, it's terraced in keeping with how the Incas terraced their mountainsides to grow food. The wastewater would be nourishing gardens that would grow food on site. It's really, really cool.
It's very cool. I'm sure it increases costs of production though. At what price would copper have to be by 2038? And I know this is a far out projection, to make mining profitable.
Well, we're looking,
increased costs.
in our PEA, we're looking at $1.14 a pound. We'll probably be around $1.35 a pound when we start. So copper's at $4. We're looking at a payback period in under 4 years for something approaching $2 billion investment. And it's going to run for 36 years, and that's only mining half of the deposit, 55% of the deposit.
Okay. Well, let's talk about the copper market. It's currently trading at around $4.12, more or less, down about 10.5% from last year. Year to date, copper is up 9.2%. What is your outlook on where we can see the price of copper, especially keeping in mind that we also see copper as a barometer generally for the health of a global economy, and the consensus is of a global recession or slowdown? What do you think that means for the price of copper by the end of 2020?
Well, I don't know if the world's going to slow down. Parts of the world will slow down, perhaps. But Asia is still urbanizing, and that's the largest population center in the world. Africa's urbanizing, and it's rivaling it. So there'll be a steady demand for copper when just building infrastructure. Copper could stay where it is, but the forecasts out there, I mean, if you look at Goldman Sachs and a whole bunch of other people, they're all saying there's going to be a supply deficit and you're going to get a doubling of copper prices in the next 5 years.
And what does Rob McEwen say? Forget Goldman Sachs.
I'm happy if it stays at $4. If Goldman's right, I'll be even happier.
Well, it's interesting because Elon Musk has a different take on the supply-demand fundamentals of copper. He recently tweeted in January of this year, "No change in copper production is required for the transition to sustainable energy." He went on to say that lithium refinement needs to increase dramatically, but that lithium ore itself is extremely common throughout the earth. But let's focus on the no change in copper production part of that tweet. I'm guessing you disagree with Elon there.
Not at all.
No, you agree with him?
No, you have to look at it and say, is copper production going to stay where it is? And there are a number of mines that have been going for many years, and they're declining in terms of production. So you have to make up that loss.
But he's saying that there's no change needed. You're saying, no change in copper production is required for the transition to sustainable energy. Interpreting his tweet that he thinks status quo is going to be fine for the transition.
Well, I'll go with that. I'll say status quo. If the production level stays constant to what it is today or yesterday, maybe he's coming up with new approaches. He's going to be more economical with copper usage. Electric vehicles are heavy copper users just by nature of it. But we're not seeing an increase in production right now. You're hearing about new copper finds, but a lot of the established producers' production is dropping off. The grade's dropping off and their tonnage is dropping off. So to keep what's being produced today, we have to have some new mines coming in to keep at that level.
Okay, so we do need new mines to maintain the current level of copper production. And if we don't have new mines, then we're going to have a problem.
That's right.
All right. Interesting take there on the spin of Elon Musk. So what would that mean for new mines coming? Because there isn't, from what I understand, a lot of financing available to help these new copper mines develop.
Well, when they realize that the copper supply is declining, the money will come out. Well, look at Stellantis came in. I think that's one example of an auto manufacturer trying to tie up source of supply. That's going to catch on with the other copper producers. I mean, GM came in and they've spent $650 million on a lithium project.
Do you think it transcends to other metals? Perhaps. Silver, for example, that's needed for the electrification process as well. Do you see potentially automakers coming in and taking a position in silver miners? If that's the only way they can secure or feel they can secure supply, yes. Well, you also happen to extract silver at your El Gallo mine in Mexico and the San Jose mine in Argentina also extract silver. So if this trend persists into automakers and other end users of silver, which is required for the decarbonization movement and the greenification, coming and consolidating supply lines, what is your outlook then for the price of silver? It usually follows gold. It's trading at a large exchange rate to gold right now, and as gold climbs, silver usually climbs with it. It's a monetary metal, and that exchange rate shrinks. We got down to about 30 to 1 at one point. We're around 90 to 1 right now. Gold to silver ratio around 86, I believe, last time I did the math, And so if it got to 30 to 1 or 50 to 1, you'd have a nice run in silver. It's an industrial metal as well as a monetary metal. A nice run translates into what price estimate for silver? You know, I always like to get a number out of you, Rob. I know. Links for good headlines. Well, I mean, if you're at 5,000 for gold and you're 50 to 1, you're probably sitting around $200, $250. $250 silver in the next 3 years. That might be a little aggressive. Yeah, a little aggressive. But triple-digit silver? I mean, that's a coin. That's a phrase that Keith Neumeyer likes to coin, triple-digit silver, and he's been saying that the supply-demand fundamentals. I'll go with Keith. You'll go with Keith? Yes. Triple-digit silver by, what are we in? By 2026, 2027? Let's go 27. All right. That's, and what do you see skyrocketing silver to that? What would be the catalyst? It'd be gold moving. It's just another form of precious metal that has been used over time to protect capital. And it's going to be, part of it is going to be protecting your capital as we see the trauma in the market right now. I mean, Rob, people would say, you're talking your book, you have gold, you have silver, you have copper. Of course, you would make these bold predictions. Realistically speaking, you see gold at 5,000 in the next 3 years, and silver, just to reinforce this point, at triple digits, exceeding even 150. Well, now you're putting words in my mouth. Well, you said 200. I'm lowering the estimate. Good. I'm being more conservative here. I'm a student of economic history. Okay. I look back, I see these periods when
There's been enormous monetary stimulation and lots of debt, and governments try to get out of their debt by debasing their currency. And we're going to see a huge wave of that. We're in an unprecedented period. And there are a number of people coming in. Ray Dalio's done a lot of work in that area.
Yeah, yeah.
And he's just...
Well, you're not alone with this viewpoint. I just wanted to make sure that I'm consolidating your position in a succinct way.
Yes.
Okay. You're certainly not alone. And, you know, a lot of this, of course, has resulted in the inflation. This unprecedented fiscal and monetary stimulus has resulted in very high inflation, which the Fed has been struggling to tame. And last time you were on the show, your Fed calls were accurate. Your inflation calls were accurate. Spot on, in fact. So what do you think we can expect from the Fed, given that, you know, we've seen CPI down to 6.4, but they're still struggling to tame inflation, and the consensus seems to be that the terminal rate from the Fed is going to have to increase from what was projected at a 5.1%, potentially to 6.5%. What are your thoughts?
Inflation's going to persist and get higher. You asked earlier on about the dollar.
Yeah.
If the dollar weakens, many of the commodity prices are going to go up. Your input costs are all going up right now. Some of that was temporary because of COVID and the dislocation of logistics. But there's shortages all over the place right now. The mining industry is suffering not only consumables, but people. There's a big question, where'd they go? And they're going to be demanding higher wages to compensate for the inflation that they're experiencing right now. So a weakening dollar would mean higher prices for most goods. Cutting the bond with China means when I go to Home Depot to buy a circular saw, it's going to be more expensive because they were the factory to the world for clothing, for all sorts of issues. And that's why I think people are going to turn to the precious metals, which are accepted around the world. You're seeing central banks being buyers for the first time for their reserves because they're not trusting the currency markets anymore.
2022 was, in fact, a record year for central bank purchases of gold. More gold bought in 2022 by central banks than ever before. But back to the US central bank and the Fed.
What are they going to do?
Yeah.
Well, they're going to really resist raising rates, but if the dollar's dropping in value, the borrowing costs are going to go up. And they're going to have to raise their rates to get the money they want.
Well, yeah, Fed Chair Jerome Powell has been quite adamant that he is going to stick to this aggressive policy of hiking rates until the job is done. Some in the markets are thinking that the Fed is going to have to pause, perhaps even pivot, as the damage starts to be felt in the economy, and that they'll take the lesser of evils will be seen as inflation as opposed to, you know, breaking the economy.
That's right.
What do you think is going to happen?
There's going to be that tendency to want to pause, but I think it's temporary. The rates will go higher.
The Fed rates will go higher? Do you have an idea of where do you think we could see the Fed terminal rate at?
If you look back to the late 60s, or late 70s, rates were moving along and the war was causing all sorts of shortages. Volcker came in when it was 18%. We're still some distance away from that. But you're going to see government actions, maybe the relief of student loans, maybe it's going to be more programs to push money back out, like the COVID period, to compensate for the higher cost of living that's coming at us.
So we'll have money given out by the government to compensate for high cost of living caused by money given out by the government.
Yes.
That makes a lot of sense.
But do the governments make much sense?
Yeah.
And you're coming up to a point, there's going to be a decision point when we reach the budget limit. And that's supposed to be around June. And in past periods when that's happened, you've had almost an immediate correction in the stock market, where it's headed south for a moment. I just look at it, I think there's going to be hesitation, but rates may pause for a bit, but they have to move higher. The cost of money is going up.
Right. You mentioned the 1970s. I believe in circa 1973 is when you joined the mining industry. Is that correct? What have been the biggest changes that you've seen over that time period?
Well, everything's got more expensive.
Yeah.
Contemporary art's gone through the roof. Real estate's taken off. It takes longer to build a mine. There's more regulations. The innovation of royalties came into the mining space and stole the operating profits from all the producers. They were an easy source of money. It was like the sirens on the Rhine singing to the sailors, and sailors crashed into the rocks.
I'm going to blame Pierre Lassonde for that.
I mean, it was a brilliant move, and they hold out money in front of mining companies, and there's sort of the reflex action. I'm going to grab it and pull it in, but not recognizing the damage they do to the profitability of their company in doing so. So that's come along. South Africa was a major player in the gold space back then. And America, Nevada, if you treated it as a separate country, it'd be the third largest gold producer in the world. China's come on stream. It wasn't a player back then, and became a huge player in the metals market, manufacturing. Gold used to be a go-to, an immediate go-to, a reflex action, and it hasn't been. The cryptos came along, some of the tech space said, well, we don't need this anymore. What I have observed is that the 20s, people in their 20s, maybe early 30s, are looking at gold in a way that I looked at gold when I came in back in 73. That they're saying, hey, this looks interesting, it's undervalued, maybe we should be buying it.
You're seeing a resurgence of interest in gold by younger generations, by 20, 30-year-olds?
Yes.
Okay.
I won't say it's widespread, because mining has this image of being rapacious and not good for the environment.
Right. Yeah, I would say that's the general pulse from people that I speak to, is that they're concerned that the industry isn't attracting enough talent, enough investors, enough people interested in it. But you're starting to pick up a change in that. Yes.
What we haven't seen is the appreciation of how important metals are to our daily life. And there's an assumption it'll always be there.
Right.
And renewable energy wasn't around, and we've seen an amazing amount of money going into it. But you're just starting to see stories that New York Times had one talking about the people who've built solar farms and wind farms, that they're having trouble putting it into the grid, that the power grid in the country can't accept it. And you start saying, well, there's been all this money and incentives spent to get this, but it won't go into the grid. How much money is required to update the grid to a point that we can take in this renewable energy, we can power all the EVs that are about to come online? I mean, could you buy an electric car and find you can't plug it into the wall because there are restrictions on how often you can plug it in? There's some very interesting assumptions that society's been going forward on, and a lot of it assumes a constant that isn't a constant. It's a mirage because of the change in technologies that have occurred.
A mirage. Final thoughts, Rob. What would you say to people looking at entering the industry, the mining industry? What advice would you give?
That, I think, is a really good question, because part of it is, how do you make it more attractive? I remember going through SpaceX and looking at it, and everything was white, stainless steel. People were moving quickly. There were lots of analysis going on. It was exciting. And I go into a number of mines and I can go in with some of our mines and I go, now who, just coming out of college, would want to come in here, and it's a dusty place, it's a noisy place. Most of the people are in their late 40s and on. Is this a place I want to work? And so the mining industry has to make it a more challenging, intriguing, comfortable place. And that's part of the reason for bringing an architect in and saying, how do we get that knowledge? And I think of the Goldcorp Challenge, and we had many years ago where we asked the world to tell us where we'd find the next 6 million ounces of gold. But it kept bringing up that the biggest gold mine in the world sits between all of our ears. And how do you connect those? And then how do you put them in a space that keeps that mind creative, coming up with new ideas? And it's embracing technology and injecting it into the situation. So it's exciting and dynamic rather than static.
Well, this has been an exciting and dynamic interview. So thank you, as always, Rob McEwen. Really appreciate you joining us here at the Bank of Montreal conference for Kitco News. Thank you.
Thank you, Michelle.
We'll do it again soon.
Kitco News coverage of the 32nd Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.